Hello and welcome to the look ahead for Friday, the 14th of February with me, Fiona Cincotta, Senior Market Analyst at City Index. So in the European session, we'll be watching for German household prices. The focus will be, though, on Eurozone GDP for Q4. We've also got in the US session, US retail sales, and then the earnings. It's a bit quieter on the earnings calendar tomorrow with just NatWest Group reporting ahead of the UK Open. Obviously, there will also be potential moves in the fallouts to any announcements that we have from Trump, who could potentially be announcing reciprocal trade tariffs at some point today, which he has warned. But at the time of recording, we haven't heard anything yet. So just kicking off then with what to expect as far as US retail sales. We're going to be focusing there. Expected to see a tick lower in US retail sales, ticking down to 0.1% month on month, down from growth of 0.4% in the previous month. Now, obviously, this data will be watched very closely for signs over how the US consumer is holding up, particularly given that the US consumer and household spending, in fact, is such a key economic driver. We know, obviously, that inflation is ticked up slightly in recent months. We've seen it just rise unexpectedly to 3%. Data released earlier this week. PPE is also showing signs of stickiness. So what we'll be watching out for is any signs that that sort of elevated inflation is resulting in consumers reining in their spending. Now, what we're looking at here, this is Euro US dollar. Obviously, I mentioned not only have we got US retail sales data due out tomorrow, we also have Eurozone GDP figures. Now, GDP for the Eurozone is expected to come in at 0% in Q4. That's basically down from 0.4% in Q3. The weaker sales, weaker GDP could be a bit of a concern, particularly if we do hear about sort of reciprocal tariffs from Trump. The Eurozone's automobile industry does stand to be in a difficult position if we do get those reciprocal tariffs announced from Trump. That could see levies applied to European cars imported into the US rise by around 10%. Currently, the tariffs are there on 2.5%. So that would be quite a difference. What we're looking at here is the Euro US dollar. Now, it's interesting because we have actually seen a bit of a recovery in the Euro US dollar from this level that we saw, the 103 level that it was down to at the beginning of this week. But we've seen a recovery. It's trying to push over that 50 SMA. The SMA there is at, there we go, 104. That's the level that we've pushed above. If we get a close above that, that would be really encouraging ahead of the data. Obviously, if we get weaker US retail sales figure, that could help the pair push further towards the 104.50 and then on to the 105 zone. We've got that to create a high. We need to get above 105.30. However, if we do get stronger retail sales, that's going to fuel concerns over inflation, which is also already proving to be a little bit on the sticky side. And that could see the pair come further lower down to that 103. 103.40. That's the level to be watching on the downside ahead of 103, which is needed to create a lower low. But this level here is what I'm watching closely, actually, as the 50 SMA. If we can get a close above that tonight, settle above that today, that would be really quite an encouraging sign for a rise above the 104.05, 104.50 level. So just whilst we're talking, though, about the US, let's just take a quick look at what's happening on the Dow. Okay, so here's the chart of the Dow. We have seen, and we're seeing this sort of consolidation pattern above the 44,000 on the downside and 45,000 on the upside. We're just really waiting, I think, to hear sort of, obviously we had the inflation data didn't cause too much of an impact, in the sense that we did see a bit of a sell-off in the US stocks, but they actually recovered from that, rebounded from that support and recovered higher. So, if we do start to see weaker data coming through, then we could get that sense of, bad news is good news for the stock market, and it'll encourage hopes of Federal Reserve rate cuts, which could actually push stocks higher. as I said, on the upside, we're looking for a rise above the 45,000 level to create a higher high and fresh all-time highs. On the downside, 44,000 is the level on the downside. If we get maybe stronger than expected retail sales data, that could push stocks lower. Obviously, also, if we do get big announcements regarding trade tariffs, then that could also have an impact on the US stock market. Just interesting to have also a look at what's going on with the DAX, obviously, with these potential trade tariffs, with GDP data. We had German inflation data, which was out today, which showed that inflation cooled to 2.3%. year on year. So that does support the view that the ECB will continue to cut interest rates. And the ECB have suggested that they will continue cutting interest rates, around 3 more rate cuts expected this year. That's in stark comparison to the Fed, who may not cut rates at all if we continue to see the revival of inflation. But as we can see, the DAX is powered onto fresh all-time highs. It is very much in overbought territory. I wonder whether if we hear sort of those announcements from Trump surrounding tariffs, that we might see a pullback to get that level back into below the RSI 70 level. As far as support and resistance, I mean, buyers are going to be looking towards the 23,000 level as the next logical level. On the downside, bit of support there around 21,500. Actually, we'll take a move below 21,000, which was the lows that we had tested at the beginning of this month, at the end of last month, to create any sort of lower low, and that will bring 20,500 into play. And then just finally, let's take a look at oil, because obviously there's a lot going on with oil because of this news surrounding the potential or hopes of a peace deal between Russia and Ukraine. Trump announced yesterday that both sides have expressed an interest in peace in separate phone calls. So whether they actually manage to make that sort of come good, then we'll see. But peace talks could be starting really quite soon for Russia and Ukraine. Now, this we've seen the oil price here, having a fair bit of volatility, but it's just coming. We've also had US stockpiles have come in higher than expected, so that's just added to this bearish vibe towards oil prices. We're back below this sort of 71.50, 72.50 support zone. That's sort of been fairly important, and we're back to this familiar territory now. Sellers are going to look to want to take out $70 in order to extend losses towards this level here, which is the 68.50 level, and then on towards the 66, 67.50 level. But we've got that long lower wick on today's candle, which does suggest that maybe selling pressure isn't that great at those lower levels. So if we are looking on the upside, watch for a rise above this key levels, or this zone, if you like, from 71.50 to 72.50 to bring the 200 SMA into focus. But again, if we do hear too much about sort of trade tariffs, that might raise concerns over global growth, which would be negative for oil prices. But as I said, any hopes and news of peace talks for Ukraine and Russia, that could result in increased supply into the market if it's agreed. If we do see any progress towards peace, Russian sanctions may be lifted, and that would be obviously an increase in supply, which is adding downward pressure, or concerns over that are adding pressure to oil prices as we speak. So that is everything for today. I hope that you have enjoyed it, and I look forward to seeing you again tomorrow.